Okay, let's welcome on board Sanjiv Chadha, the MD and CEO at BOB, joining in the show right now. Sanjiv, hi, morning. Your moratorium has come down significantly to 21% as I see it. How have the levels moved from June, and what exactly is the definition being adopted at your bank? We understand that there can be a stark variation among various banks and different banks. Secondly, what is the profile of customers that are opting for the moratorium?
So I think when we look at the moratorium for BOB, we need to look at it in two contexts. A is again the dispensation that BOB chose to adopt, and number two, making sure that we have a standardized definition when we compare the different figures of different banks. So when it comes to the dispensation, BOB had opted to have an opt-out clause, which means that we gave a moratorium to every borrower unless they refused in writing that they don't need the moratorium in the first instance, which is why our moratorium figure was appreciably high, upwards of 60%. Now, in the second round, what we said was that if you're a small borrower, up to 10 lakhs outstanding, we'll still give you an opt-out option, because in COVID times, it will be very difficult for borrowers to reach out to us and to express their intention. But when it comes to loans above 10 lakhs, it will be an opt-in. Specifically, you have to tell us you need a moratorium. That has had a very large impact on the number of or the proportion of book which is under moratorium. Principally because, as we suspected, a lot of people simply want to preserve liquidity, although they may not necessarily need the moratorium option. So the figure which is there as we speak today is 21%, which is effectively the term loans where we have not received the last installment as a proportion of our overall loan book. So even if somebody has paid the previous 2 or 3 installments, if the last installment has not been received for the term loan, we say that is under moratorium, which is a fairly tight definition. So this percentage of term loans over our overall loan book today stands at 21%.
Sure. We're now going from interest holiday to recognition. What do you envisage in terms of your NPAs? Where do you think they're going to stand eventually? Because the RBI recast should provide a relief to all banks, but what about sectors or accounts turning permanently bad because of the slowdown in the economic activity and not just a temporary aberration?
So we draw our comfort from 1 or 2 factors. Number one, the fact that the moratorium percentage has come down so sharply would suggest that again that there is a very large proportion of our borrowers who are in a position to pay. As of now, the loans which are under 10 lakh, that is being given an opt-out clause. But the moment people are required to pay installments even in respect of that part of the book, I would expect a very large proportion should start paying. The reason for the optimism is also the nature of our book. Our retail book in particular is, I think, very good quality. If you look at our home loan rates, they are pretty much the lowest in the market because we intend to attract the best borrowers. So nearly 74% of our retail borrowers have credit ratings of 725, credit scores of 725 and above. So we are fairly sanguine that again the retail book should actually hold fairly well. In terms of the composition of the book which is under moratorium, about half of it is corporate. So that is where I think we would need to engage with our clients on a case-to-case basis. Although here also I would believe that the impact of COVID was serious. And again, as we speak, for very large swathes of industry, that impact is being mitigated. So I would believe that a large percentage of the book which is under moratorium, even when it comes to corporates, should not need to take recourse to a restructuring. And I think the way the RBI has articulated its position, that you need to make a 10% provision if you again have a restructuring, I think balances it very finely and will ensure that a restructuring is availed only by those borrowers who actually need the restructuring. It's very difficult to hazard a guess what that exact percentage might be, but based upon what we saw with the moratorium situation, I'm fairly sanguine. It should not be a very large percentage, but if people do genuinely need restructuring, I think we must make sure that that option is available to them, both in terms of being fair to our borrowers and also being fair to the bank, because ultimately the quality of book depends upon the borrower continuing to be performing well.
All right. Thanks so much for joining us, Mr. Chada, and taking us through those numbers this time around.